Hi guys, this is Simone back at you with my part 3 video focusing on the MW structure. This is the primary structure that I trade. I incorporate in my trading, zooming primarily in on this structure. It's something that happens right throughout the day, right throughout the week, um, focusing on the 15-minute and H1 time frames. In the previous videos, we looked at the setups that I focused on, the stop hunt setup, and I looked at entry and confirmation. And I want to use this video to really focus on market structure because I want you to see the power of this particular structure and how you can use it to really help you in your trading. I'm looking here at the US New Zealand dollar H1, and you know, let's look at some stuff, because one of the things that I spoke about, and you'll keep seeing me doing this, and this is important because it helps to reiterate in your mind what you're looking for. I want to be able to look for the same thing all the time. It's easy to pick them out. So even looking at the chart right now, I'm seeing the patterns all over the place. But what are we really trading? Is it the stop hunt of any high or the stop hunt of any low? And these little dots that you see me have here on the chart, they're called fractals, and they're very important to the structure. And it also helps you to easily identify the swing highs and swing lows, and that's mainly where the MW structures will set up. So it's great to have them there. All right. So what happens when we have a stop hunt? What we want to look at, for instance, with the M, is the stop hunt of a high that will take us to a lower low, right? So let me look at this market structure, and maybe you'll get a little bit of what I'm trying to say, zooming in a bit. All right. So we had this buy up, clear M, then price pull down. Then we have this gap between the two highs with a higher high, and we see a small stop hunt. I'm just gonna put a line up there so we can see the stop hunt clearly. Clear stop hunt, very small. And if you wanted confirmation, you could have waited. You could have waited on this bar, which gave the continuation. See that? The continuation pattern, which we spoke about in part 2, right? And then you could have taken an entry here. Very low risk, and this is an H1 chart. I mean, this is 11 pips from, or 10 pips or so from the high. Put your stuff 5 or so pips above that. Where is price heading? And that's what we want to look at. Where's price heading? Now, this is how I approach this trading this structure. If we're stop hunting this high, this swing high, we're likely heading to the swing low that it's connected to. All right. And so my first outlook on take profit would be there. It's a little bit more, but I'm going to take that extra information to the next video. But let's look at this. This is sufficient for you to profit, okay? All right, so we've entered short here, right? And I'm saying, okay, where are we going to take profit? So we sold, and we are saying, okay, since we had a stop on here, we're probably going to head down to there. Bam, take profit. But you should probably see that there were a number of swing highs that were hunted, okay? Let me show you. You had this one that was hunted. Hunted meaning we went higher, above it, and then we came back below it. Notice that the bearish bar high on that swing high also gave us entries again. So we could have taken profit and re-entered. You know, we could have chosen to do that depending on your trading style. All right. So the first entry would have given you, let us say you came out here, say 30 pips roughly. You could have taken a short here again. Now what this is saying to me is that this high that was hunted could probably take us to this swing low right here, or as low as this swing low right here. So when I enter short here, I'm saying that the hunted swing high gives me a hint as to where sellers want to take price to, as in the swing low that's connected to it. Okay, so this is telling me now that I could take profit here, or I could be looking to take profit somewhere around here. And it's good to mark the from wick to body, okay, that zone. All right, so we don't have to rush too much, you know. You could have taken good profit. It's 44 pips right there. Great profit. Nothing wrong with that. The market went up and created a second structure, and it keeps happening, you know. So if you could have held it, you know, depending on, again, your trading personality. And as you can see, we went down to do the 107 pips. But you could have taken profit here for 43 pips and waited for something else to play out, another play. Okay. Look at this. In the Asian session, what happened? You know, you had some pullback. You had some pullback, right? And then look at what happened now. We had a high created. See that swing high? Fractals help us with that. And then we had a stop hunt. I'm gonna get rid of some of these lines so that you can see exactly what I'm saying. All right, so here we had a pullback, and you know, many people would think, hey, we're reversing, you know, and that kind of thing. And we had some push up, but because the price was so focused, because of this breach right here at this strong swing high level, I was really expecting, I'd be anticipating price heading much lower, you know. Coupled with that, this is the first major retrace from this strong down move, right? Okay, now look at what happened. All right, now we would have used our, you know, our entry technique. Price did the stop on, close below, waited for confirmation, it closed back below again, no problem. We could have entered short anywhere here. Bam, bam. Any one of the confirmations, anyone. Okay? And now we have a good idea that because we stop hunted this high, and it's the same principle, we know it's gonna take us back to this low. So if you're keen on taking your profit like that, that's good. You know, look at that. That's 40 pips. I mean, it's 40 pips. 40 pips. But because of this stronger structure still in place, see, we're still not coming back to that. We're still not able to close back above that structure. It's holding that resistance. So what's going to happen? We are heading toward this low. All right, even lower, but I want to show you that this particular principle. So now the price went lower and lower and lower, and until it actually hit that low. Went a bit lower, and I'm sure if we try to to look a little deeper, we'll get some information, some explanation for it. But I want you to understand that when we are trading these stop hunt M's and stop hunt W's, that each swing high that we get the breach of, or that stop hunt, because each swing high that we close above actually represents a stop hunted level. Okay, it may be that it was something that took place on a bigger time frame. All right, so I always pay attention to this bearish bar at the swing high. I'm always looking there to see how price is reacting. I mean, you take some time to look through your charts and you'll observe this. All right, so I'm gonna just clear up the charts, and that was the M that we were looking at. And I'm gonna show you the W, and then I'm gonna show you how I use this to help me to determine when there's no more, when buyers or sellers are beginning to dry up, using the same principle that we just looked at. Okay, this is a great place to start. I think I wanted to look at an area where we could just continue and you could see the reactions to the different levels, but this is it's basically a single level trader, and I'll just show you since we're here. Okay, so let's look at this. All right, let's look at this structure right here. If the market is going higher, if the market is stop hunting a level, we want to look at the distance between the level that it stopped hunting and the high that it wants to go to. We want to make sure that it's something that's going to be feasible, something that makes sense. All right. So for example, in this case, and I did say I didn't want to use this one here. I mean, you got some pips on this, but I don't want to use that example. I want to use something where the market is moving up, just like the one we just did, where you can actually see, this is better. Okay, so this is a great example right here. Okay, we can see the clear arch or W formation, and we have the higher low, and we mark our trigger price. That's it. Okay, and I'm just gonna, just for clarity's sake, I'm gonna draw my line so that you can clearly see what I'm talking about, not wondering, what that level is she talking about. There it is, the arched formation, arching lower. Okay, now when the price closes back above here, or trigger price, we know we're gonna enter, right? We're not unclear about our entries right now, or where our stop should be. We know our stop is gonna be below here, right? And this is an H1 chart again, guys, so the stops are a bit bigger here, but here would be your entry. Where are we looking to exit? And this is where this information in this video becomes useful. So what we're saying is that we want to look at the swing low that was hunted, and then we want to look at the swing high or the swing highs which are connected to that particular swing low. So immediately I can see that there are two swing highs just above, and usually when they are so close I just use the one that's higher. Okay, right? So if I'm gonna buy here, I know that my take profit level is about there. So I'm risking roughly, let me see, well, in this particular trade, it would have been about 35 pips because your stop is about 5 pips below. But your take profit was 54. That's not bad. That's not bad at all, right? And this was your first TP. But what we want to do, and there's going to be some more information that I need to put in perspective based on what I'm learning from my own observations and what I've been studying from Forexia.net. This is the MW strategy is not my personal strategy. My approach to entries it's a bit different, but it's not a strategy that is unique to any one person. However, the best knowledge on the um the the MW structure I have gotten from Forexia.net. Those guys, Dylan Shields, best ever trading knowledge so far. Okay, so yeah. So what I was saying, guys, we could have said, okay, we're gonna take profit here and we're out, we're done. But the fact that we came in this zone with this strong push, if you notice, there are hardly any bears in there. The strong push up. We could observe now, and I'm gonna move the line because whenever the price wants to go higher to another swing high, it can't just go. It moves in a structured way. So let's look at the swing low and the bullish pattern in the swing low and the low of that bullish bar. So what we want to see is price breaching, which it did, closing above it, stalling. Look at that, look at that, look at that, look at that, guys. And this was telling us that, hey, these guys are probably heading into this high or the high above that. Can you see that? So there's no question about where to take profit. There isn't any question about where we take profit, guys. It's so easy. It's so easy. And then, so now the price sits there and it goes close to TP. I mean, hey, you could have come out with 53 pips. It came back and it gave so many opportunities. This is look at this. 1 a.m., 2, 3, 4. Look at that. Right back. 1 p.m. 2 right back. I mean, this is here in New Zealand. So these moves will come mainly in the evening. So look at this now. Boom. 1 bar. 126 pips. TP. Look at that. Pull back a bit. TP. And I want to show you something. Let me go across here. TP. Now, look at this. We know that based on this breach, the price is probably heading to this high or higher here. But in order for it now to go to this high, it probably has to close above these lows right here. And I watch those lows. When the price is having trouble, geez, staying above those lows, we have problems. I'm gonna pause and come back 1 minute. Okay, so guys, heading into our TP level, we want to look at those lows that that could reject buyers, you know, because the buyers are rejected there. The buyers use these levels to push to the swing highs, right? And so if the buyers are being rejected and you can see that there are multiple swing lows to take us much higher, and maybe this was where they wanted to stop the buyers were targeting. So if you notice now, both these swing highs were struck, and it's possible that the price reversed after that. See, we got a strong 120 pip pull back after that. All right, and they were not interested really in taking the price 61 pips or so higher. They just wanted to take out these two highs. And so we have to pay attention to, so we're buying these and we're watching for when the price begins to strongly reject those lows, all right? And we got our strong W, very strong trade. And you can take several approaches, whether you want the long haul, you know, if you can go to sleep and feel okay and wake up for your 188 pips in the bank, great. If you wanna take partial profits, great. If you wanna take profit, re-enter, take profit, re-enter, take profit, re-enter, great. Whichever works for you, but the structure, this market structure is extremely powerful, and I believe one of the most consistent structures that you will find in this market, because this is how the market plays. Very, very, very powerful. And look at this, guys. I mean, look at this. Look at this. We're here, and you can see them. I mean, these patterns, they get me so excited. Look at this. Look at this. You know, stop hunt, bearish pattern, continuation. You don't even have to rush it. You don't need to pick the top. You don't need to be able to pick the top. You just need the confirmation. That's all. You just need the strong confirmation. Look at this. We're stop hunting this swing high. So we're anticipating price to go to that swing low. It's simple, right? And if we look at it, this is a good 94 pip range. Why are you rushing? So look at this. Stop hunt, enter. If you did there, that would have been about a 17 pip risk for an 86 pip reward. You didn't. You waited for confirmation and a pullback. Fine. So your risk is now 24 pips, but for a 79 pip reward. That's great. And again, when the swing lows are this close, I look at, and I pick the lower. I pick the lower for my TP. It's just gonna take both out most times. It's just gonna hit them, you know. So I mean, the confirmation trade already is 100 pips, you know. And then we had other stuff going on. Look at this. Look at the stall right there. You know, we're rejecting the buyers here at this swing low to go back up here. So we're not going back there. And we stop hunting this swing high. So we're going lower. Look at that. It just continues down. Downwards, guys. Look at that. I mean, we could have followed that entire down move. Look at that. We could have followed it with this structure. I just want for you to be able to see what I'm saying. Look at this. And this was a major swing high, right? And I want you to see exactly what I'm saying. So I do not trade the very high of the swing high. I'm looking for the bearish bar high. Let me put a line there. I want you to see that I don't really trade that. This is a hint that maybe it could breach this level, but I'm waiting for that level to be breached, because sometimes the price uses buyers use the high of the same bar as support. You can see, look at that, support to buy. Okay, so but look at this now. Once we got there, that's where the price stalled, and now this is telling us, hey, we could be going down to this low right here. Look at that, 144 pips lower. Didn't go exactly there. I mean, you had a reason. Look at this. There's a lot of reason to pay attention to right here. bam, bam, bam. All of this is a strong area. So you had 1, 2, 3, 4, lots of levels there, you know, to pay attention to. And again, this would have been, no, there's no more. Actually, let me pull back. I wanted to see what else was there. Okay, actually you had a lower zone. You had some lower stuff going on. I wanted to see if there was any lower low that it would have targeted to go to. But look at that, guys. One little letter M for 254 pips. However you wanted to take the trade, whether you wanted to take 50 out of it, the whole 254 in portions, or you wanted to run it, swing the trade. So that's it. I hope you got the gist of this. This video was really focusing on how you can use the structure of the MW pattern and how you can use it to plan your take profit levels, you know, to plan additional entry levels as well, and the areas that you should focus on for entries. All right, as the trade plays out. I hope you enjoyed that video. Give me some feedback. All right, God bless.